Greetings to all value clients. Welcome to GKFXPrime Analysis and Education YouTube channel. This is Alan Hong, market analyst of GKFXPrime. I'm gonna share my daily analysis for Wednesday, 19th of July. So first of all, let's review the major market movement. The first instruments we are looking at the dollar index in 4-hourly charts. So the US dollar was nursed losses on Wednesday, edged up 0.1% to 94.69 after skidding to a 10-month low against the currency basket as the Republican failure to push through a stalled US healthcare bill raised the fears about the rest of President Donald Trump's reform agenda. Republican effort to overhaul or repeal Obamacare collapsed in the United States Senate on Tuesday, rattling the financial markets and casting doubt on the chance of getting Trump's economic plans, such as tax reforms and stimulus, through a divided Congress. And the expectation that the Federal Reserve will be more cautious about raising interest rate also weighed on the greenback. So economic data on Tuesday showed the US import price falling for a second straight month in June as the cost of petroleum products declined further, suggesting the inflation pressures could remain benign for a while. So the Federal Reserve Chair Janet Yellen signaled caution last week in her congressional testimony, and disappointing US inflation and retail sales data on Friday added to evidence that the central bank has reason to take its time in tightening. So according to the Mitsuo Imaizumi, the Tokyo-based chief foreign exchange strategist for Daiwa Securities, he stated that the failure of the healthcare bills added the newest pressure to the dollar, but it was already under pressure after Yellen comments last week. On the other hand, the dollar also slipped 0.1% on the day to 111.95 against the Japanese yen, which is well below its nearly 4-month high of 114.49, which touched last week. It fell as low as 111.68 on Tuesday, which is its lowest level since June 27th. So the Bank of Japan will conclude a policy meeting on Thursday, and the policymakers are expected to raise their economic growth forecast but cut their rosy inflation outlook next week. According to sources, reinforcing expectations, it will lag well behind major global central banks in dialing back its massive stimulus programs. And a majority of economists polled by Reuters expect the Bank of Japan to delay again its projected timing for achieving the 2% inflation target. While as for the Aussie, the Australian dollar was up 0.1% at 0.7918 after surge 1.5% to 2-year highs on Tuesday as the minute of the last meeting of the country's central bank showed policymakers turned more upbeat on the economic outlook. Having a tad in commodities markets, the gold price was edged higher on Tuesday, rose by $7.37 or 0.61% to $1,241.18 a troy ounce, so it was benefiting from a slump in the dollar to 11-month lows, as investors' fear grew that tax reform could be delayed, following the collapse of a healthcare bill aimed at replacing Obamacare. So gold price capitalized on a slump in the dollar, hitting 3-week high as investors questioned President Trump's ability to deliver on tax reforms after the healthcare bill aimed at replacing Obamacare failed to garner enough votes. So the President Trump has reiterated several times that healthcare reform needed to pass before his administrations would proceed on to tax reforms. So dollar-denominated assets such as gold are sensitive to move in the dollar. A dip in the dollar makes gold cheaper for holders of foreign currency and thus increased demands. So investor sentiment now on gold has turned positive in recent weeks amid the narrowing expectation that the Federal Reserve will keep to its plan to hike interest rate at least once more this year, after recent economic data failed to show any improvement in inflation. So some analysts believe gold gains could be capped as other central banks appear to be edging closer towards tightening monetary policies. And the Bank of Canada raised interest rate for the first time in 7 years last week as well. As for the oil price, it was fell on Wednesday, with the US West Texas Intermediate crude oil price down 12 cents or 0.3% after a rise in US crude inventories and ongoing high supplies from producer club OPEC revived the concerns of a fuel supply overhang. The US crude oil stock rose last week, adding 1.6 million barrels in the week to July 14 to 497.2 million barrels, industry group the American Petroleum Institute said late on Tuesday. And outside the United States, the supply from within the Organization of the Petroleum Exporting Countries, the OPEC, remained high, largely because of rising output from member states Nigeria and Libya, and despite the club pledge to cut productions. So Nigeria and Libya are exempt from the deal between OPEC and other producers, including Russia, to cut production by around 1.8 million barrels per day between January this year and March 2018 in order to tighten the market and pop up the price. So now we're gonna review the highlighted economic data that released on Thursday, as well as the highlighted data going to release today. So yesterday, the New Zealand was released its consumer price index for the second quarter, also referred as the inflations, and show a result of 0% growth, which meets focus of 0.2%. So as well as the United Kingdom was released its consumer price index for June, and it was 2.6%. It meets focus of 2.9%. So it is the main reason that pressure on Great British Pound on yesterday. So the German ZEW economic sentiment for July as well, it was weaker than expectations with 86.4. So it brought some impact to the euro currency on yesterday as well. So as for today, we can focus on the building permits that are going to release by the United States tonight at 8:30 tonight. So it is expected to be better from previous 1.168 millions to 1.2 millions. So as for the last data tonight is the crude oil inventories, we're going to release by the United States as well, and it is expected to increase more than the previous with negative 3.214 million. So now let's take a look for technical analysis. The first instruments we're looking at the GBP USD in 4-hourly chart. So the GBP USD is still traded in an uptrend, but it was retraced from the recent high of 1.3100 of resistance level. So currently the price is hovering between the range of 1.31000 and 1.3000. Alright, so in short term, it is expected to remain hovering within this range, alright, but for longer term direction, it is still suggests to move further higher following the current uptrend after the price close above 1.3100, so then we can aim for the next target at 1.3160. As for Euro, the movement of Euro USD in 4-hourly charts actually was similar with the GBP USD. It was retraced from the recent high or the resistance level of 1.1565 and currently is heading downwards. But the trend direction is still pointing upwards. So after a closure above 1.1565, then it is suggested to move further higher towards the next target at 1.176 for a long-term target, right? So referring to the MACD, both movement line is remain pointing upwards, although the momentum is decreasing. So we should wait until it's rebound from lower level. Then only is another good opportunity for us to follow the trend directions to move further higher. As for the Kiwi, the NZD USD in daily chart showing us that the candlestick now is testing to close above the previous high or the resistance level of 0.736. So closing above 0.736 suggests that the continuations of the uptrends and probably will move towards the next target at 0.745. So it is suggested and expected to be stronger after the price closure above 0.736. While the Aussie, the Australian dollar is benefited by the meeting minutes, the latest meeting minutes that released from the Reserve Bank of Australia. So currently the price is heading upwards towards the next target of resistance level at 0.8000. Alright, so it is suggested to move further higher and towards the next target of resistance level. And referring to the MACD as well, both movement line is remain pointing upward and the upward momentums is still very strong for the Australian dollar. As for the Japanese yen, it was regained some ground after it hits the target of support level at 111.7 and currently the price hovering around 112. Alright, but based on those indicators, the both moving average line was form a dive cross, okay, was form a dive cross and pointing downward now, so which means that the short to medium term's direction is pointing downward now. So it is suggested to move further lower after the price closed below 111.7. Then we can aim for the next target at 111.1 or even 110.2, alright, even lower. Meanwhile, the commodities markets, the gold price was retraced from the target of resistance level at 1244, so currently is hovering below the resistance level of 1244 as well. But based on the indicator, the both moving average line was formed a golden cross below, so it is suggested to move further higher after the price close above 1244. Then it might probably to move further higher towards the next target of resistance level of 1253, okay, 1253. Right, so for support level, we can refer back to 1232. While the oil price, the WTI oil price in 1 hourly chart showing us that it was losing momentum, okay, because it will retrace back from the previous high, okay, exactly the same level of the previous high. So so closure below $46 per barrel of support level, then we can speculate for short sell positions towards the next target at 45.25, okay, 45.25. So short to medium term, it is expected to be weaker. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.